I can't see the gold price staying here. Again, it'll probably weaken if the Israel thing calms down. It'll go higher if it gets worse. But so it'll make new all-time highs in 2024. I have confidence of that, But I'm a person who doesn't really want gold to go to $10,000 an ounce because of what it implies. You might be rich with your gold, but the rest of your life is falling apart because of what's happening in the economy. So I hope that doesn't happen. But, I think gold 2,500 to 3,000 next year is, very attainable.
JeffClark from thegoldadvisor.com has set the stage for what he believes could be a glittering opportunity in the gold sector. According to Clark, we might be on the brink of a gold upcycle, and he's particularly enthusiastic about the potential gains in mining stocks, especially the junior players. He boldly predicts the possibility of gold reaching a new all-time high in 2024, setting prices to soar between $2,500 and $3,000 by the following year. The gold price is building momentum, testing an 8-day high near $1,990. Pointing to the past, he notes that gold has been a star performer, boasting a 28% average return in the 6 months following the start of a recession, outshining the S&P 500 by a significant 37%. But the gold equities steal the spotlight, generating a 61% average return and outperforming the S&P 500 by an impressive 69%. What makes gold and its equities unique in Clark's eyes is their role as potential safe haven assets during economic uncertainties. The recent tremors in the financial landscape, marked by cooling inflation pressures and weakness in the U.S. labor market, have sparked doubts about the Federal Reserve's plan to keep interest rates in restrictive territory. This uncertainty, according to Clark, is injecting new momentum into gold. However, despite the bullish whispers, sentiment hasn't quite reached the level needed to propel prices back above the elusive $2,000 an ounce mark. For Clark, it's a trifecta of positive factors that could act as tailwinds for gold in the future. Join us as we delve into insights shared by JeffClark. To stay updated with our latest uploads, be sure to subscribe to our channel and activate notifications. Thank you.
Well, it would occur historically, on average, just 5 months after the last hike. So we have to see if there's going to be another hike or not.
Yeah.
I kind of doubt it, but who cares about my opinion? But I think they'll probably pause because of the CPI is coming down. Most parts of it are. So whenever that occurs, historically, we measure them going back to the 1950s. On average, the first cut is only 5 months after the last hike. So when we see what we believe is the last hike, whether that's already occurred or it's coming soon, there's going to be probably a cut in 2024. Maybe they're raising rates so they can cut in the recession, because the recession's, that's pretty clear. The recession's coming, right? So
We've heard that before, though.
Yeah, it's a timing thing, though. The negative yield, the yield curve being negative for almost 2 years now. But a lot of, if you look back historically, the last 7 recessions have been predicted by a negative yield curve. But they've occurred anywhere from like a few months to up to 2 years later after it's first gone negative. And we're about at that point now. So, I think it's going to be pretty clear we have a recession either very soon or in 2024. It's probably the most telegraphed recession in the history of mankind. So I don't know how bad it really will get, in the markets when everybody's expecting one. But we'll see. If it's a hard landing, that's a different story. That affects a lot of things. But the good news is gold has risen in all the past 8 recessions but 2. It's risen in 6 of 8, and the 2 it declined were single digits. So we can expect gold to be reasonably strong during a recession. You know what? I went back and looked at all the crises we've had in the past 50 years, I believe. And there was some type of crisis or event, negative event, roughly every 3 years. And I started looking at them, and I realized that half of them were black swans. They were things that people were not expecting. How many people expected the pandemic? Some people called for the crash in '08, but most people did not expect it. So it could be anything, and it could be something that we're not really prepared for. Obviously, the U.S. dollar is part of this, but you see the U.S. dollar go up and gold rise at the same time when the Israel was invaded. So, it depends on circumstances. But I do think the rate hike cycle ending will be positive for gold. So you could have a trifecta there. You could have a recession, which is good for gold. You could have interest rates not rising anymore, maybe falling, which would be good for gold. You could have them resume money printing, during a recession. If it's bad enough, they'll do that. That's positive for gold. So, there's a trifecta of things there that could be positive. If the war in Israel ends or subsides, we'll probably see a little bit of a pullback. Gold always rises in geopolitical conflicts like that, but it tends to soften after it's over or resolves or, weakens or whatever the case might be. So, and gold stocks, by the way, I know I'm going on long here, but gold stocks, I looked at those during a recession and they rose in 5 of 8 of the recessions. They actually only fell in 3 of them. So this market, our market, the gold market, may be coming upon a strong point right now because common stocks are probably going to fall. The economy is going to be depressed, but gold and gold stocks have a reasonable chance based on history of doing well.
This week, the silver scene has been nothing short of dynamic, with prices spiking by 8.43%. This bullish run is attributed to investor speculation swirling around the possibility that the U.S. Federal Reserve might hit the pause button on its interest rate hikes. According to JeffClark, this surge in silver isn't just a fleeting moment, it's part of a well-documented pattern where silver, with its characteristic reactivity, tends to catch up to gold on a percentage basis over time. As highlighted by Clark, what adds fuel to the silver fire is the annual deficit witnessed in the past couple of years. With demand consistently outstripping supply, this trend paints a compelling picture of the white metal's future trajectory. The latest update from Metals Focus, representing the Silver Institute, underscores the dominance of record industrial demand as the primary driver behind silver's 3rd consecutive annual deficit. While industrial demand is projected to reach unprecedented heights this year, the overall global physical demand is expected to ease slightly to 1.14 billion ounces, a 10% dip from the 2022 record. Nevertheless, the silver market's strongest pillar is anticipated to grow by 8%, reaching a record 632 million ounces in 2023. Let's get back to the interview.
So we know also from history that silver tends to lag. When gold takes off, silver doesn't necessarily take off. It tends to lag and be stagnant. That's very common. That's its DNA, if you will. So it could be possible where gold makes a nice move and silver lags for a while. That would not be surprising. So it would, you can't get upset about that. Like, what's happening? Because history shows that it eventually catches up. It ignites. It catches up to gold and passes it on a percentage basis. So I don't know if that happens in 2024 because I think the next bull run in this cycle is going to be significant. It's going to be strong. So I think this could be a 2 to 3 year bull market easily once it makes new all-time high, once it breaks out. And silver will come, but it'll have a delayed reaction. The fuse there is a little longer than the fuse on gold. I have a great chart of supply and demand each year, and supply always meets demand or is a little higher than demand. And then all of a sudden, last year and the year before, we had an annual deficit. In other words, demand was much higher than silver. The projection this year is it'll be high again. Not as high as last year. That was like, headline news. But this one will be significant. If you add up all the 3 years of the annual deficit between supply and demand, it's 430 million ounces of silver more in demand than annual supply is providing. 430 million ounces in 3 years. I mean, that's almost 1 year's of annual supply. So it's very significant. Meanwhile, you have new uses for silver coming out literally every month. Every month, Silver Institute puts out a great monthly newsletter, and they outline where all the scientists and chemists and all that are finding new uses for silver. So industrial use is going to grow. Throw in some type of monetary or financial crisis, gold rising, silver is going to go. So,
Say 5 years into the future and you had to choose one asset that you want to hold from now till these 5 years in the future, what would it be? It doesn't have to be gold or silver. It can be whatever you want.
that's easy, gold. It has to be gold. I think it's going to be the asset of the decade. I don't, silver will be a runner-up. It may even pass in percentage terms, but silver is a safer asset. Gold's a safer asset to hold. So, I think it's the asset of the decade. That's one of the themes on our site. I would have to own gold. If I had to only own one thing, it would be gold. Well, this is going all the way back to the 60s.
Sorry to make you go into history.
Or I think early 70s is when we started measuring it. And the gold stocks, when the 3 times they did sell off, it was significant. It was, 20, 30% type of thing. But from 2000 to present, I believe they've only sold off once out of the three recessions we've had. But the circumstances were always different, it's hard to, you have to go and measure each one. But historically, there's an average there that gold typically rises, and gold stocks rise more than they fall during a recession. That's the kind of the message.
In his analysis, Clark acknowledges the potential for silver to outperform in percentage terms. However, he also underscores the prevailing sentiment among investors who prefer gold. This preference isn't arbitrary. It's rooted in gold's well-established reputation as a store of value. The allure of gold, with its perceived safety and stability, remains a steadfast choice for investors navigating uncertain times. That's all from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.